So what we're really undoing is, of course, when you look at the metals, is yesterday's rally is coming undone uh, because everything he said was as dovish as the Fed can be. I mean, should we go through? I don't know what everybody else heard.
I know Andrew's in. He was listening to it too. So.
Sorry?
You go ahead, sir.
This was social justice, but I mean that's what he spoke to. You know, I saw Angelo say, "Oh, there's still Phillips curve," only when it fits the narrative that they want to put out there. You know, but he said they're basically casting it aside. There is no. He said it 3 times. There is no maximum employment. There is no number. So where the Fed under Bernanke and Yellen, you know, they kept moving the goalposts. He doesn't even have one, and it's all centered on trying to get back to where we were, especially with the dynamic of trying to go back to when he singles it out, Black and Hispanic unemployment rates, and he said there were life-changing gains, and he cited, you know, I blogged about it many times, both the 2019 and the 2020 Fed Listens tours, that if you listen to them, they almost sounded like labor rallies. That's what I heard. You can go back and read the blogs from that time period. Very much so. And he stayed the course on that. They are very concerned about the employment situation. Very, very concerned, because they were patting themselves on the back when they got those numbers, especially for, I hate this term, minority groups who were benefiting so well, but those who were, I think in economic terms, the last hired and the first fired were starting to do better, and wages were starting to move up, and then the pandemic hit. So that seems to be where the eye on the ball is at. How do we get back there? That's my takeaway. The inflation, it's not their major concern. There's not, and I think one of the things that the market has found, he talked about the flexibility to inflation targeting, and there is no hard target. Well, that's actually, you know, I thought that was probably the most hawkish thing he said, because that gives the Fed the flexibility to move when they want to move. Okay, if there's not a hard and fast target, they can move when they want to move. But the reason I make it so dovish is they are so focused on the unemployment.
Are move doing what?
I'm sorry?
What are they going to do?
They have no idea, nor do they.
So that's my point. I mean, I accept what you're saying. But you know, short of, you know, I'm just intrigued to watch whether they, if the dollar strengthens on them here after that statement because the bonds go down.
I think so. I think so, Andrew. That seems to have been the pattern, right? So let's see.
If that happens, then I'm not hanging around long Nasdaq.
Oh no, I understand. I mean, this is powerful. You know, from a trading point of view, this is a powerful reaction. And is it totally geared? Now, every time we've seen this in the last 2 or 3 weeks, each time, I should say, I hate every time, but each time, by the end of the day or 24 hours later, we had seen a reversal. Right now, there's a sustained movement here, and you're not seeing the reversal as of yet. So look at, the euro is on its lows, and it was 80 ticks higher.
Well, I think you spoke about it last Thursday when you talked about they didn't adjust the minutes.
I'm
And
sorry?
you spoke about it last week when he didn't adjust the minutes.
Right.
And it was your view was that was an intentional act, that he wasn't going to get there yet. I agree with you, except what you said today that he's very focused and he'll move towards that eventually, and who knows, maybe even to the Stanley Fisher paper I sent out. But it's interesting, if the bonds go and the gold goes, then because the yields are up. I mean, look at the euro high today. That's another shocking high. Right into the 618 last week's reversal into the inception high.
Well, you can see it in the European bonds, you guys, that huge rally. It was all the same trade.
Yeah. So I just wouldn't be complacent in any stock market if they really go after the metals here, which they could easily do because of if these yields kick, particularly in the long end, then we could have an interesting couple of days ahead of us.
Oh, yeah, I can't agree with you more. You can have some real interesting days here.
I mean, look, that euro high today, Judd. Whoa.
Yeah, that is an ugly high. So the market is giving us basically everything we would have we could have wished for, to tell you the truth, as far as action. Now, and yesterday it's just showing you that somebody felt that they had everything he was going to say and got way ahead of it. I mean, because that move yesterday was very dynamic.
I personally don't know why the S&P is up 80 ticks on the week. So I'm interested to see how it plays out, particularly if this move continues to happen in the bonds and the metals, and most importantly the dollar. As you said, and I think I was writing about it the last couple of days. The market was really looking for some juice today.
Well, they just got the ORL daily stops in the euro.
Yeah, I mean, this is quite a show going on here, and yet, from on a longer term picture, this was very dovish. I'm telling you, the most non-dovish statement was the flexible approach to inflation targeting. No mathematical formula, and 2% over time. I mean, so he gave everybody the most dovish outlook he could. And from a total macro perspective, do the other central banks follow this now? Don't forget, that may be the most critical element to me.
Yeah. Well, the miners haven't behaved very well the last 2 weeks,
No.
and they need juice, as you know. They've been leading the board a little bit that you didn't want to chase the golden knee rally because they haven't shown any internal strength at all. And if that euro and the Aussie and the Kiwi, which is basically at the moment a Wednesday, Thursday 618 rally.
Let me raise this point though. Okay, I think it's an important point. If I can remember my train of thought. Hold on, let me back up from it. My mind is racing.
Go ahead. You're getting a huge stop run in the GDX right now too. They're going to come down here and get these stops.
Sure, why not?
Yeah, they got them already.
Yeah. I have to think about it. Oh, so when we look around the world, it's going to be what do the other central banks, how do they respond to this? Do they follow, because the Fed, everybody has just followed. Well, first it was the European Central Bank under Draghi, and then the Fed was trying to reverse it. But ever since the Powell pivot of January of 2019, every central bank has been in lockstep, every major central bank, with what the Fed has set out. Okay, prior to that, Draghi had to do whatever he did to save the euro. But now that the euro is kind of stabilized in here, things are looking certainly more more, well, as I said, it's a very, very low probability now of an existential question for Europe. Okay, so I actually want to see if it's how the gold currencies react here, because we've seen some correction, of course, with the currencies outperforming the metal for a couple of weeks here. And if you put up the 240-minute chart on that, you'll see it far more clearly. Gold, euro, I mean, you could see it. So let's see what takes place from here.
Yeah, they just, and it's a big run in gold and euro. I mean, and they went down to the 50 again and held.
Yep. I'm entirely in your camp. I think what he said was instructive, that he'll do whatever it takes, and he's taken the employment number into full employment. It gives him maximum flexibility. So if the market falls 10, 15%, you'll get yield curve control and you'll get MNT. So I guess my contention leading into the speech, the market was over their skis, over their tips, and if the dollar continues to strengthen, I'm looking at the volatility across, the volatility in the Nasdaq's got up to 34 now from 26 last week. There's some stuff here in terms of vol rising as well. It doesn't make me comfortable with risk at the moment.
So, I mean, all of these things, but the market's been on a run, and the equity. Yeah. Look at the equities know that interest rates aren't going higher, right? We know that. Interest rates they will be lower for longer come hell or high water. And they can play with this inflation targeting. Again, I go back to the question I asked. So if we get an annualized 6% inflation rate with unemployment at 9%, are you more convinced going forward that the Fed just stays the course? And look at we've gotten some steepening, right? Because now people are going, and that's not a great, well, yeah, if you want inflation, that is and you want the market to reward inflation, then the bond action is absolutely spot on target. And the curve steepen, right?
Yeah, hold on.
We're watching the curve steepen.
Yeah.
And look at how the bank stocks react.
Yeah, they just took off. And the Dow, I will point out that the Dow stopped at the top matrix level.
Okay, that's very important too. But if you don't think that is how powerful the algos are in driving this, because as soon as they see, I don't know what they're programmed for, but how many pips higher in the curve? Let me see if I can find out where the curve is.
The best ones are 5/10s right now.
Well, a lot of people are looking at that 530 to buy the 5 and sell. And I mean, it's moved quite a bit already. So on any type of correction, we're not.
Well, that's a huge move. I mean, look at that.
Huge move today. That's in everybody's crosshairs. But this, and I mean, I've got some key things. We're coming into month end, so that'll be, of course, more than critical for me over the next 24 hours. And I'm going to give this market time to breathe. I just want to see how some things settle out here. And then I have that wonderful Canadian dollar 200 week moving average, which we just keep playing with. And it actually sizes up with the Aussie Canada too on the 200 week moving. So there's a lot of things here. And there's a lot of reason for me to be very, very patient here. He didn't say there's no sense of tightening here. He's pushing, he pushed as gently as he could with the velvet glove, so to speak, for more fiscal stimulus, which if you really got some sustainable fiscal stimulus, the Fed may change a little more quickly, but he's given themselves, the Fed is in this beautiful academic work. They can never be wrong here. They are in the perfect position for a policymaking unit because they can never be wrong. If they let inflation run hotter in order to relieve some of the debt stress, that's my opinion, because that's what financial repression and inflation in this type of environment is all about. Fine, that's a good thing in their mind. So he can never be wrong. Oh, we let inflation run because we were trying to get the unemployment level, and so many times, this was heavily sated with the concerns over those who lost jobs through no fault of their own. I mean, he wasn't as definitive in using that line, but everything else around it, he said. So I'm going to be very patient. I'm going to let this play out and see if the market comes back to that view. Because, at the close of yesterday and even the beginning of last night, with what you saw in the metals and then the dollar, it's exactly what you were seeing. It's exactly what you're seeing. I will also tell you, because the yen was starting to give me what I wanted. And of course, we got up to, actually made new highs for the week today, did we? But tomorrow we hear from Abe. We didn't make it. Yeah, we made highs for the week today.
Yeah, that was right in the balance in the cloud too.
Right. It's nothing, but we hear about what's going to go on with Abe, and I can't tell you. I did talk to my guru, and he is that. I'm not kidding. Get the book. It's going to become a very hot book now. I told him, I said, how far a publisher will go to increase sales. And he laid out, he did actually, Toby did a really good, if you can find it, Andrew, you may be able to post it. I can't. CNBC Asia with your girlfriend, Mandy Drury, interviewed him about Abe on Tuesday, I think. It's a really good interview. It's 6.5 minutes long. If you can post it, it's worth watching because it'll set you up for how Abe, what are the machinations if Abe were to actually leave office in his announcement tomorrow. And again, nobody knows. Whatever he's sitting on, because it's been very, usually, Japan has a great place for leaking, but there's no leaks. And when I asked Toby, I said, what are you hearing? He says, nothing. I said, so is he leaving? He says, if you're inside his brain, you tell me, because it's just not out there. So let's see, but more importantly, let's see how it impacts the financial situation.
Yeah, and the spreads are all positive. With the bonds coming down, all the equity bond spreads are staying positive.
Yeah.
So you're not looking for any follow through in the indices. You've had stop runs in the euro. You had stop runs in the metals, both ways.
Right.
And now it's got to breathe a little bit, and it's going to be a time frame trade the rest of the day. I just don't think they can put it away. Period.
And the gold stopped at such an interesting level. I mean, forget that it went to 87, that 83 to 85 area on top was big. And now, now we're down into the test. We tested the other side. So you've had wow, what a trading market today. Just been incredible. And the bonds have had to say right now, let's see, I'd like to see how far, because Andrew, let me come back to you, because the point is that he didn't talk about yield curve control, right? Anybody hear one word on it?
None.
None. So I think that's kind of what's fomented a lot of the selling in the long run, especially as you're seeing Judd, on that 530.
Yeah. I mean, the bonds did that. ORLs on they got the ORL daily, weekly, and monthly stops. They just took them both ways. They showed you both sides of last month's range by a few ticks.
Yeah. Yeah, I mean, there is a lot in motion here. There's a lot in motion, and very important to stay on top of that. Again, we're early in the day, and this is exactly the way the algorithms have reacted every time we've seen a sell-off in the long end. And the equity market got beat up, and then the equity market takes a step back and goes, okay, whatever was good was good. So now it's just giving me better opportunities because I know they're not raising.
No, so far the equity market's has done a good job.
I'm sorry?
So far the equity market's done a good job, considering.
Yeah.
All right, here's it. Stan just sent me the yield curve.
Okay. What does he got? Hold on. Oh,
That's today, 1 day, 2 day, and 1 month ago.
that's very good, Stan. Which one? That's all the way out to the 30?
Yes, it's actually, yeah, 2 to 30.
Okay. Look at how nice that is. So where are we at right now on the differential? I can't, I'm an old man, so my eyes.
This has got to be 140, 1.41-ish up there.
Yeah, it looks like looks like about 140.
That's on the 30.
Oh,
so
look at Judd, look at the bottom left at the cursor box.
Yeah, that's what we want to see.
Do you think I'm capable of this? Hold on. The 1 day is 148.
The current top one.
The current 150.
Okay.
1 day is 148. 2 days 150.
Yeah, but this is showing us percentage movement terms, I think, right?
Yeah, it's yield.
Wait. Oh, hold on. All right, so I got it. All right, so the 1 year is 14 basis points?
It looks like it's a little bit over. I have to put mine back up because I can't read it there either.
I rang it. I just emailed you the chart.
I can see it right. I'm looking at it right now.
Okay.
You know what? I'm so used to, sorry, Stan, I'm so used to the Bloomberg way that this is a little more, so I have to pull myself back and. Yeah, so we're probably running what about? Thank you, Sean. Let me get on that chat because give me some good.
Yeah, the brakes didn't go anywhere in anything. So.
Yeah, and now let's see where this stabilizes at.
Yeah, big stop run.
See, the euro just rallied 40 ticks, right?
Yeah, right off that low. They run the sell stops in reverse. You got an ORH stay working in Russell 30 year.
So now the currencies are almost taking their cue. This is like a cartoon chase where everybody's just chasing in a circle. Pretty soon they'll turn into butter. They're taking their cue. Well, the equities liked it, so maybe it's not as forceful as we think. And as I've argued from time immemorial, for people who do pay attention to what I say, who I've written and listen, I've maintained this, that the long end of the curve, see, that's what kills me with these algorithms. It's historically, if short-term rates are steady and long end yields at very low levels or even moderate levels are going higher with the short end staying, meaning the curve is of course steepening, it's not bullish for a currency, by the way. It's not. Flattening curves are much more bullish a currency because it shows that interest rates on the short end are too low, and the currencies until some break point, and I don't know where that break point is, but if short-term yields are deemed to be too low, investors flee until yields go high enough on the long end to reattract them. But a steepening curve reflects that the central bank is behind the curve, so to speak. Now, this is very difficult to measure in these times that we live in right now. Very difficult to measure. So we do have, it is, as we would say, and I hate the phrase, but I have to use it, a paradigm shift with what the central banks have all done over the last 12 years. And I'm still adjusting to it and trying to understand it. There's no one answer to it. I was busy reading academic stuff this morning and laughing because they always want to make it seem so easy. They always want to make it seem so easy. And it's just not. It's just not. So
Yeah, look what this has done to the cattle.
hold on now. Now you're making me think. Damn.
No, I'm not doing that.
Okay.
It's all beans and corn off that stuff that Michael was telling us, and now they're saying it's dropped. Okay.
Right. Michael was so on top of it, and then we had that article, from that one goofy China, I probably was the Inquirer, saying that there was no shortage, all kinds of stuff. There are so many sources for for misinformation, and I believe a lot of it is intentional misinformation, by the way, because they know it'll get picked up. There are so many outlets. That's why you have to be that's why I read everything. I'm going to get off in a minute because my uncle passed away, and they're doing a Zoom funeral. But I listened last night when I ate dinner with my wife. I've become a big fan of Trevor Noah after I listened to his biography. When I drove home from Arizona, I listened to him read the whole, and wow. Thank you, Alexandra. I listened to Trevor Noah, and I really gained a fondness for him. It's that, I like Jon Stewart, but I never really, Daily Show's not. But Trevor Noah was phenomenal. So yesterday, I guess my Alexandra, they were listening because my son-in-law is a big fan of what's his name, the Shock Jock. What's his name? Who has the Sirius radio station?
Yeah.
Howard Stern. Thank you. So Howard Stern had Trevor Noah on yesterday, and I didn't. So we went looking for it on YouTube, but I found an old one about 6 or 7 months old when Howard Stern had him on, and Trevor Noah made a great comment. He makes a lot of great comments, but he says, I don't watch cable news anymore. I don't watch news. He says, I only read news because I can't watch because it's all opinion. And he went up and down the line, and he says, I don't want, it's just one opinion. And then they saturate you with opinion, and then you go on. He says, and it's so much what my thinking was. I just started, I was eating chili and I choked on it because I was laughing so hard. I go, yeah, he's got it right. And he said, as a comedian, with his stand-up work as well as the work for the show, he needs to go through the media because that's what the Daily Show really has been about. But he only goes to read it, and that's what I'm telling you. I mean, there is so much crap out there because financial media is the same way. They're in such a hurry to get the story. And there are so many outlets vying for the eyeballs of that story. Nothing says it more than Zero Hedge. And I'm not saying that Zero Hedge doesn't know the guy who put it together and the group, the Tyler Durden model. I'm not saying he doesn't know. In fact, I first started reading it because I said, whoever this is definitely worked at an investment bank. And I'm sure Alexandra will agree with me because he knew things that only somebody who'd been on a desk at a central bank, an investment bank would possibly know. And when he was outed, it bore that out. But Zero Hedge, it's all about the sensationalism now. And it's to be first, and get out there and get the eyeballs. So much of it is just absolute crap.
Ira, I drove out into the echo chamber on Tuesday.
I'm sorry?
I drove out into the echo chamber on Tuesday. And went up to Lake Geneva. Looking at all the Trump signs. And just the commentary from the people.
Yeah.
They don't bother to read anything. They don't. All they do is listening to the propaganda.
Yeah, and it's all sides though, Judd. And that's why I can't listen to it. CNN, they lost me back in 2003 with that famous op-ed piece by Eason Jordan, who was the head of the CNN Mideast News Bureau, when they admitted that they were broadcasting Iraqi lies because they thought it was more important to get some story out than none. And I said, "Nah, you're lying through. That's just a blatant lie, because that's who your audience is, and you were going to broadcast whatever came your way. So no credibility, and you just have to fight through all that. And again, it's not a political statement. So when I heard Trevor Noah say it, I go, I really want to stand up and applaud, because that's what we're left. And this room is so good because of that. And other rooms that I go to, I feel the same about Matt, because if you really ask real questions, you will get to a much better understanding. And, that's why I'm going to be patient here. I haven't even read the headlines yet. I saw some on Bloomberg, which that somebody forwarded to me. Let's see what else I got.
Well, on another note, I got a hold of AY yesterday because it was driving me crazy because I couldn't figure out who the guy was that used to roller skate down LaSalle Street in the morning.
Oh, Bob's in.
Yeah.
Bobby's in. Yeah.
Bobby's in. He never talked to anybody in the pit.
Yeah.
And then he started his own religion in California, where everybody dropped acid to him as a tax haven. And then he bought a village in the Philippines and had his own harem. And now apparently he's married and living in Highland Park. So he did the reverse of Falwell Jr.
You know what? You know me. I love because as my tagline, taken directly from Dostoevsky, Notes from Underground, says 2 + 2 = 5. That's the world in which I live in, because I don't believe anything is really balanced except real science. Real science in which you keep replicating the experiment and getting the same results. That's balance. Everything else besides that, no. And I've always gravitated to those like Bob Zinn, who are outlier thinkers, because they interest me far more, and I want to know what they're thinking and how they, as my brother Ralph, may he rest in peace, said at my wedding when I married my wife, who's a CPA and has an MBA in global finance, even though she's really not worked, except living with me is work enough for anybody. As he famously said, this is the most perfect marriage ever. It's Janice the accountant and Ira the unbalanced. And I took great pride, because I always want to see the world through unbalanced eyes. So I still reside on that.
Yeah. You got on the phone the other day with Maria, with a customer, whatever,
Me?
Mingzai, whatever his name is. What was he looking for that we had a hard time finding? Because I have a call with him today, and she forgot exactly what he was looking for. What's he? By the way, what system is he looking at now? Do you know?
Are you talking to me, Sam?
Yeah, no, the non-CQG one he was trying to model.
Oh, I don't know. I have no idea. I have no. I can't. I don't know.
TOS?
I really. You're asking me. I don't know. I don't know. I didn't dig that deep.
I don't know. Most of the people at ADM use us.
Yeah, that's interesting. I don't know.
Okay.
What
All right,
were
I'm gonna
what
have
were you
to-
talking about? DTN or something else?
I don't know.
Maria wanted to be on it with me, so I set it up as a team meeting so she can be on. He said that was fine.
Okay, and let me just give you, because I got an update
Right.
on the 210.
Lies I make up, she's going to know what they are.
The 210 is at 55.8 right now. So it's up 2 basis points on the day. Lo and behold, there's the bank stocks. So if the 30-year were to start to reverse and rally here, like we've seen the last few times we've had,
Also, he's not using UDSs. He's just doing it on his own.
yeah, I don't think he's using you. No, he's not using UBS.
That's fine.
So, Judd,
Yeah.
if the long end starts, if the futures start to rally, I mean, just for, as we say, shits and grins, watch what the bank stocks do.
Okay.
All right. I mean, because that shows you how the algos.
Let me.
Yeah, go ahead, Ira.
No, I'm done. I have to get off because I'm
Okay.
going to go click on.
All right. Thank
All right. Okay. I tell you to enjoy, but there's nothing enjoyable. Well, yeah, if you got in sync with it, there's a lot to enjoy. So, yes.
All right.
All right.
Be well.